Good morning and welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capra. We're going to review where the markets are at from last week and where they are right now. So the big sell-off hit, as you can see down here, the 200 period moving average on the S&P 500 cash. And they're up here a bit this morning. We'll take a look at that, maybe a little bit more than a little bit. However, we got to put it in the perspective of where they came from. And it does look like a little bit when you look at it from that perspective. That being said, even though they're up here and they're trading right now at 26, well, a bit higher here, they're still in a downtrend on the hourly time frame, which means sellers are going to come in when it reaches an area of resistance and test it. That's just the way trading is. Within a downtrend and even an intraday downtrend, and you can see the daily has now violated the trend deeply, sellers are going to come in as it reaches a area of resistance or where there is supply, or in other words, where longs got caught testing it on the way down as buyers. Okay, so as it comes up into there, and let's take a look at where the futures are at right now. You can get an idea exactly where they're at. And this is now a 24-hour chart since we're looking at the futures. You can see they're pushing up into what is the resistance area up here, and so far they're consolidating, going sideways. Now, something to take note of when you see this happen, it is a bullish sign in that it went sideways here, and rather than pull back to this minor area of resistance, it created a support area, and now it's broken out and it's going sideways. We do not want to see it break below this area, and certainly not below that breakout bar, because that opens up the door to a move lower. And since it's coming close to an area of resistance, right, that could possibly happen. If it can push up into this area, well, that opens up the door to moving higher. But this is the same concept in a daily time frame, meaning while this was coming off of a low, this was trending up, and rather than pulling back here, it went sideways and created an area of support. It broke out, which suggested it would go higher, but then formed an inside bar and then broke to the downside, and that's what formed a breakout bar failure. If you go to the mastertrader.com website and the chart of the week, you can read articles about the breakout bar failure and various concepts, and you'll also read what I had sent out on Friday afternoon just prior to this market turning higher. Now go to the site and look under memberships, chart of the week. You can sign up for that and get it in your mailbox, and a lot of great education that Dan and I put out, and that's a free service. Okay. So here are where prices are turning up, and make sure you subscribe to the channel and get those alerts. Here is the move up that's happening right now, and we put in the context of this resistance, and we'll see what's going to happen. And what we want to do is measure how far can it get from that low to that high, and the deeper it can get here, the greater the probability of possibly going higher. However, I want to show you what I shared with our subscribers in this week's letter. To do that, we have to switch to the weekly time frame. And based on the weekly time frame, I said it would be a better situation if once this bounce formed, and we're expecting this bounce because of what I wrote in the chart of the week based on market internals, which I'll show you in a second. But based on this longer time frame, it would be better for prices to come down here, have a bit of a deeper correction, and then begin some repair work, some going sideways, possibly a bottoming tail bar like this one right here. Notice that little bottoming tail bar? That type of price action in this area of support, which could set up the next move higher. When you get a sharp move to the downside like this, it creates a lot of uncertainty in the market. And just because it's bouncing here, that doesn't mean that that uncertainty is over. Okay? So don't get caught in some very short-term optimism. We can take advantage of this with the appropriate time frames and strategies. But based on the weekly time frame, this bout to the downside isn't over yet, and bears will show back up again. This is constructive, but what we want to see from an intermediate term point of view for investors is this ideally come back down a bit more, consolidate a little bit, and that'll set up some great buying opportunities. Now, the internals that I was looking at last week when I sent out that chart of the week was that sentiment was finally coming down to a bullish extreme. Breadth had reached an extreme and was beginning to diverge. Note the higher low on this next move to the downside. In addition, you can see the day-to-day optimism here. And going into Friday's close, those option traders continued to bet heavily that the market would go down, and why we were saying to subscribers that the market should be up at least at the beginning of the week. And volatility also contracted a bit. Notice the lower high at that time when it came in. So a retest of a prior low on less volatility extreme is bullish. Now, what we'll see in the coming days, if the market continues to go up, we'll see if option traders want to then start shifting to the bullish side, or they continue to bet on the downside. So we'll update as this unfolds during the week. Become a subscriber and get up-to-date information right in your inbox at mastertrader.com. We'll be talking soon.